Robschild, no investment advice. Welcome to the show where we view financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Friday, January 31st, 2025. We made it through January without big cracks in markets. Many people, including myself, were thinking, hey, January might be the month where things really fall apart. We just kissed that 6,100 level. The Fed's getting nervous, one way or another, however you want to see it. But the January effect apparently kept markets afloat. We're still hovering around all-time highs, although not going any higher, which makes me think maybe the January effect simply kept things afloat, till maybe we turn over here. But I don't know. It's all crystal ball reading, isn't it? PCE data came out as expected today. The most important piece of this is really the year-over-year core PCE, because it excludes the volatile food and energy, which can go up and down depending on the weather. And the last reading of this 2.8%, expected 2.8%, and the actual came out 2.8%. This is above the 2% target that the Federal Reserve has, but we're not surging higher, as some people have in some markets have been kind of sniffing out. And across the board, all of these reports coming out, this is the last month column, the expected column, and the actual column coming out almost basically equal across the board for all of these reports coming out today. We'll see how that affected markets in a moment. Next, tariff announcement. Main headline of the day from CNBC.com. Tariffs on Canada, Mexico, and China begin Saturday, White House says. Let's see what happens, right? Markets are preparing themselves for the worst, the way that I look at it. And again, we'll take a look at the charts in a moment. Last main agenda item for today, the MOVE Index, the Bond Volatility Index. I wanted to bring it up only because I recently came across this little pattern here that is looking suspiciously to me like a bull flag, and I'm wondering if this is going to break out to the upside. And remember, just because it's higher volatility, it doesn't mean that bonds are necessarily going to crash. It can also mean that bonds are ready to go to the moon. No major changes in the daily reminders. Watch macro update 11025 with dominoes in the crystal ball to see it. I've been talking about on the past few days about doing a new update to this. There's nothing to update. Nothing's changed. All of these stay the same. Watch this show to hear me read through what I think are extremely important reminders to be thinking about on a daily basis. Equally, the crystal ball readings remain the same, and the Robschild portfolio has no significant changes. On to the charts. We opened today near that magical 6,100 level, poking our head above it and driving down with a red candle. The bears took control. This has partly to do with the fact that rates have been going up. It's largely to do, I think, mostly with the tariffs being the headline, because we got to price in the worst possible scenario, and that's inflationary. And so if it's inflationary, then bond yields have to go up, and if bond yields go up, stocks kind of have to go down. So that's what we're seeing here for today. It's how I see it. The 10-year Treasury note yield, this is the most important, longer duration vehicle that we have. And we had a green candle. I will note that we are still below this head and shoulders top neckline here. A good deal below it, actually, I'd say. The way I see it, there's stronger pressure for yields to go down than there are to go up at this moment. One of my favorite things to have happen in markets is when I draw a line several days or weeks beforehand and we land right on it. like to a T. I love when that happens because it says that I'm not the only person in the world to see the pattern TLT with the reverse head and shoulders. Now, testing, can we break back below this neckline of the head and shoulders or not? This still looks bullish as heck to me. While yields often follow oil, and oil has been looking bearish. Really, I say bearish, but really it's sort of the end of the blow off top. We're back into this fight zone here, right? Where the game all started. So looks like oil wants to go flat until we get more information, along with Dr. Copper still kind of going sideways. While other markets are flipping their lids, Copper is just like Dr. Copper, the PhD in economics, is like, I need to see something real before I decide if I'm going to go up or down. Next, gold. Interestingly, large topping tail. This can be a large reversing candle. Even though we had a close above the breakout, that's normally a bullish signal. However, it being a ginormous looking topping tail at the moment tells me that, this isn't a sure thing yet. And, this previous candle, granted, has only been out for 4 hours. What we really need to see is a solid close higher. Like, I want to see a close at like 28.20 before I believe it's going to go up to 3,000. I don't think I'll be participating in this if that occurs anyway, even though I believe it'll go up, because I'm not that type of trader. I don't like buying things that are so high above their moving averages. It makes me too nervous. I'd rather buy something that's unreasonably cheap or unusually cheap. It feels a lot safer, the way Benjamin Graham taught me. Speaking of significant previously drawn trend lines being very effective, K-Web, we had this red candle. Basically, I count this as landing on my trend line right here. Amazing stuff. This is holding up for now the way that I see it, looking to break out higher. I wanted to reiterate in today's show that the S&P 500 dividend yield is near historic lows within the past 150 years. This is very significant. This is not nothing. This is screaming that the S&P 500 is probably a little bit overvalued. And last chart of the day, Bitcoin. Better chartists than me use this white line, and better chartists, I'm speaking mostly of Gareth Soloway on Verified Investing, who's been doing this for decades at this point, drew this line, and he says short term Bitcoin actually looks bearish. I pointed out a day or two ago that this appears to look like a bull flag to me, and it sort of does. His perspective, which is infinitely better than mine when it comes to chart patterns, is saying that this line right here is suggesting that Bitcoin is actually looking bearish here. And I trust his chart reading better than mine, which is why I wanted to include that in today's episode. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.